I so desperately wanted Lewis 3000's comment to be right and for me to be wrong. But alas, today is in fact September 30th. The average mortgage interest rates, according to Bankrate.com and lots of other websites, are still in the mid sixes. As I mentioned in the video that Lewis 3000 had commented on, when the Fed cuts interest rates, it does not automatically impact mortgage interest rates. Usually mortgage interest rates have already priced in any type of rate cut. You will see the improvement way before the actual rate cut announcement happens. And then based on what the Fed commentary is right after the rate cut announcement, that actually has a ton of impact on rates, and they started to go up after the rate cut. However, at some point, we will likely end up in the fives again. We are in the fives for certain government-backed loans, but for conventional loans, I'm not seeing that unless you're paying a good amount of money for that interest rate. Now, when all mortgage interest rates average in the 5% range, so 6% or below basically, we are going to see 5.5 million more households qualify to buy a home. A lot of people are alarmed by that figure, and they anticipate that that's going to drive home prices up further when they're already statistically pretty unaffordable for a lot of Americans. But I kind of have a hot take on that, which I'm going to do another video on. In a nutshell, I think this may actually end up stabilizing the market a bit more because more sellers are going to be willing to actually list their home to buy a replacement home because they're more comfortable with this interest rate versus a 7% interest rate.